Hi, I am Tanya Kerr with T. Kerr Property Group, and today I am joined by Christina McQuett with Fairway Mortgage. Christina, say hello to her.
Hello.
I am excited to bring Christina to you because we're going to talk about loans, so mortgages, and a couple of things that I want to go over. And I think this is one that you and I kind of chat about all the time is really people being comfortable getting pre-approved, because what we hear. Is oftentimes people will say, well, I think I'm qualified for this based on some random app or something. Right. I think I'm qualified for this. I think this is what my mortgage payment would be. And they go through it, but they don't have the real information because they haven't gotten pre-approved. And from what I'm seeing is that a lot of times people are nervous for a couple of reasons. Either number one, they're afraid what the pre-approval may come back at. And so they're doing a guessing game, and they're a little afraid of doing it, or they're afraid of a little credit hit. Right. So talk to us a little bit about when people are getting pre-approved, why should it be no big deal?
Well, that's absolutely right. It should be no big deal. So when you submit an application, which I definitely suggest, a lot of times what people are referring to is when they go online for like a Quicken mortgage or an online brokerage. And they're going in and inputting a few basic pieces of information, and the online AI spits out, this is what you're qualified for, right. This is what that monthly payment looks like. They're not providing any documentation like pay stubs, assets, not pulling a credit report. And so it's just more of a pre-qualification instead of a pre-approval.
Right.
And so they get this rough estimate of what the payment would be. Now, these AIs are in different states, so they don't know the average tax rate in Texas.
Right, which ours is much higher.
Much higher.
Yep.
So people are getting quotes that show $200 a month, which that would be great, right?
Yeah. Fantastic.
And then also insurance, it's different in different states and different requirements. So they get set unrealistic expectations when they go online. Yeah. So the better thing to do is to go with a local lender and get an actual pre-approval where you're submitting the application. You are providing the pay stubs, the assets, all of the income documentation, and we're pulling a credit report. Then we can really determine what loan programs the borrowers are qualifying for and which amounts they're qualifying for, because there's many different programs.
Right.
And there's other ways to come up with additional income, and you don't know what you don't know. And so the best thing to do is just submit an application. I help guide the client through the application. It's a very easy process. And then what I do actually up front is a soft pull credit report. And so it doesn't have any negative impact on the credit scores, but it gives me everything that's reflective on the credit report.
Is that normal that a lender can do a soft pull, or is that like a Christina McQuett Fairway thing?
Fairway just recently started allowing us to do it. Not every lender does that.
Okay.
A lot of lenders do the hard pull.
Yeah, right.
So I do not do the hard pull until we get under contract.
Okay.
And haven't had any issues. But if a lender is doing the hard credit pull, it's only if it dings the credit, it's only a few points.
Yeah. I've seen 5 to 10 points max is what I've been told.
Yes. Yeah. When individuals start seeing additional inquiries and their credit scores dropping 30 points, it's when they're shopping for auto loans, multiple credit cards, and then mortgages. And so it's all of those different industries that are pulling the credit.
And so when someone is trying to get pre-approved, they have 30 days in which it counts as one query, correct?
Correct.
Okay.
Yes. Yeah. And credit reports are good for 120 days once the initial credit pull is taken. Okay. And then the pre-approvals are good for that amount of time as well.
Okay. So really, when people are fearful, and I will say, I remember back in the day, my first house, I was so scared what would come back. Yeah. And I remember I probably put off home buying for a year because I was just afraid. To be honest, I was scared. And I didn't have anybody guiding me and doing a great job with that. And then I finally went and got pre-approved, and then it was such a relief to know, I can afford to be a homeowner.
Yeah. And if at that point we're needing to come up with a game plan, then that's what we do. We help strategize and come up with a game plan to eventually qualify.
Okay, so let's say somebody applies, their credit is a little bit low at that time, so you can run this through your system and basically come up with a plan for them to raise that credit score. How long does it take, what do you think on average for someone maybe to get to a place, if they come in and they're a little bit lower, to just raise it enough to go ahead and get approved for a loan?
That's a great question. And it's very dependent on what's showing up on the credit report.
Okay.
So if there's a collection, or if there is a balance, the utilization rate, the balance to the limit is too high, those can be really easy things to navigate through and improve the score immediately, pretty much within a week. So if the card is maxed out and we decide, okay, well, the average utilization rate we're looking for is 20%, then we can pay down that debt and do what's called a credit rescore. And then that credit rescore comes in within a week, and then it reflects on the credit report right away, so we're not having to wait 30 days.
And a better rate.
Correct.
With that. Yeah.
Correct.
Perfect.
Yes, I've helped many clients with that.
Okay. So I had a situation recently. I had a really lovely seller, and the buyer, lovely people as well. Unfortunately, went with a lender that was not on top of the file. It was a VA loan. They got their certificate of eligibility, but they didn't pay attention to it. And so when it came to close, I'm talking within 3 days of closing, they realized that the borrower did not have the amount of eligibility that they needed. And it wreaked havoc in this transaction. And so on our side, we had been making sure everything had been done and everything was great. And the lender said, yep, we're good until 3 days before closing.
Wow.
So choosing a phenomenal lender that's paying attention to the file, you're not a number, you're a human, and they are walking you through the loan process and making sure that everything is in order and organized for the underwriter so that there aren't a bunch of questions. Right. So can you talk a little bit about choosing a reputable local lender versus maybe going out and, because there's all these online things. It's like, get this rate, which that rate usually doesn't really exist. It's marketing, as we know. But can you talk a little bit about why we choose a really reputable lender to work with?
Yeah, absolutely. And I'm sorry that happened. That's
me
very
too.
stressful during a home buying process 3 days before closing. And that's just something. So for example, working with me, I do that at pre-approval. I pull that certificate of eligibility and make sure the clients have enough eligibility, because if they don't, then they're going to have to bring money to closing. And so working with a local lender, I've actually been in the industry for over 11, 12 years now. And so I've seen a lot. Not every transaction is going to be the same, but I know guidelines. I know how to navigate through different unique situations to come up with unique financing. And so when you're working with somebody who's just, it's another deal, they're just paper pushers. They're not really working a lot of times with a licensed loan officer. And so they're really not even reviewing the supporting documentation that's coming in. So they're just sending a quote and then pushing it to the underwriter, and then things come up while under contract, which is unfortunate.
That's when it comes up, is if they didn't do their work on the front side, then the underwriter catches it, and then all of a sudden you're in mid-transaction and things are going sideways.
It's pretty crazy to see some of the lenders and the lack of knowledge they have. It's kind of scary. Okay,
so we're going to see if this works out. Let's see. Okay, so if somebody were to say, should I get pre-approved? Our response would be, yes. Just do it.
Right now. Just apply
Just try it. Just give it a go.
Application takes about 20 minutes, and then there's some supporting documentation. If I take the app over the phone, it's 5 minutes. I mean, it's so quick.
And the worst thing that can happen is now you have the information, and now you can have a plan in place. Even if you're not pre-approved, you can have a plan in place so that you can be, and knowledge is power.
So it absolutely is. Yes. And that's what we're here to help guide with.
Well, thank you for being here, Christina.
Oh, my pleasure.
So if you want to reach Christina, can you tell them how they would get in touch with you?
Yes. You can go to my website at theMcquetteGroup.com, and it has all of my contact information on
You're
there.
going to have to spell McQuett. Nobody's
But
going to
it's
spell
not
it.
going to be on the screen. It's MAQUET, so theMcquetteGroup.com.
All right. Well, thank you very much. And I appreciate you being here.
Yeah, thank you for having me.
Brought to you by T. Kerr Property Group.